Hi there, my name is Simon Misiewicz from Optimise Accountants, and this particular video, I'm going to be talking you through the extraction tool of cash from your limited company. Now, it's one thing to be tax efficient using a limited company, but it is an entirely different thing to be tax efficient to get the money back out again. Now, there are a couple of things that you need to read: assumptions, purpose, disclaimers, etc. And there's a video portal which you can click to watch this video, but you're already doing so. You'll notice that there are details where you can enter, which is highlighted in blue. Anything that you see with a gold trim, and white means that you can't enter that data. It is formula based. Now, if you're watching this and you pay for a spreadsheet, then why not go on to Taxable, which is our buy-to-let property tax portal, where I'll be talking to you on Wednesday evenings to answer all of your tax questions. And there's a 7-day free trial, which you can click on there for more details, and it'll whisk you over to a different website. In the meantime, coming back to this is, what do you need to do with this spreadsheet? How can you become more tax efficient? Well, simply put, you would enter your personal details, and I'm going to just run through an example here. So let's call myself Jim Smith. I'm not sure why, because you know me as Simon Misiewicz, but hey, there you are. And let's imagine that we've got Sarah Smith, who we're also considering. Now, typically this is used as husband and wife, hence the reason why the same surname. Now, you're most likely to have put money into a limited company. Let's imagine that you've put in £30,000 each. And this is really important because it will help you to understand what tax-free income you can get. I'll go through that in a little while. Now, you may be employed, you may not be, and this is another good reason why we do two people at once. Let's imagine that we've got Jim, who is full-time in property, has no real income from employment, but Sarah is a, let's say, high-rate taxpayer, £55,000, and she's got enough salary. She also makes pension contributions where Jim doesn't. So let's imagine that she's got £10,000 worth of pension contributions. This information is so important when we're looking to extract money out of the limited company. Now, what we want to do is project forward for your company profits. And what we're going to do here is give an example of a company that's making £100,000 worth of profit. And clearly there's £19,000 worth of corporation tax to pay. But we don't want to pay that. We want to minimize the corporation tax liability whilst extracting that money out into our personal names as efficiently as possible. So what we're looking at here is pre-tax before wages and dividends of £100,000. That is ultimately the pre-tax that we've got to dispose of. So we're going to be going down this now list. And you'll notice the first line is less wages. Now, wages is money that you can take out of a limited company. And the way this is done is you will take 8788. Now, most of you will be thinking, well, it's less than my personal allowance. And that's absolutely right. It is less than your personal allowance. However, what you're looking for here is a way for you to take money out. And if you're not taking any form of wages out, then why not use that tool? So basically, if you've got no wages paid to you, pay 8788, which means you do not pay income tax, you do not pay employers' national insurance or employees' national insurance either. Now, you'll notice with Sarah, she isn't taking any salary, and that's because she's already been paid a salary. We don't want to be doing that again. By the way, all of this information you can see in this article for full details. Less interest. Now, this is an important one. You'll notice that we've got 1,800, which is, if you look at the tax band, £30,000, which is a loan. And what we presupposed here is that you've got an interest of 6%. Now, you could change these numbers because these are all in blue writing, in blue cells. Now, the thing to bear in mind here is that you can get £1,000 worth of tax-free interest out of the limited company as a basic rate taxpayer, which does reduce to £500 for high rate taxpayers. So you might want to adjust that for Sarah, because if you pay more than £500 worth of interest to Sarah, she is going to be subject to 40% income tax. Not a good idea. That said, the interest charge does reduce corporation tax, so not so bad idea at all. This spreadsheet will help you as well from a pension contribution perspective. As we've entered some details at the top, we're going to say, well, how much pension contributions you made to date. Sarah's made 10,000, as we said before, and Jim hasn't. Now, that means that Jim can make £40,000 pension contributions gross, and Sarah can contribute £30,000 because it's reduced by her allowance. Now, there are other costs that you can have in the limited company, which will help to reduce the corporation tax liability. The first one is personal life insurance, up to about £500, typically is about right. Couples will get about 1,000. Private medical, again, you can put in a bit more, but this is whereby it's not medical life insurance, but this is money that you have for an inspection. An inspection sounds quite robotic, but an inspection from a perspective of having a well person check done. You can have VDU checks. So if you have an eyesight test or you have glasses that you wear for, I'm not sure what that is, but if you have glasses for using a laptop or a screen or some sort like that, then you can indeed reduce your corporation tax liability. And rather than you paying for eye tests, you can get your company to pay for that. Our next slide is vouchers. I like this one. Again, the article is there for further reading. Vouchers can be, your limited company can pay for some store vouchers at £50 a pop, and those would be helping to reduce your corporation tax liability, and you could spend those in high streets as long as they are non-cash redeemable. There's no benefit in kind charge either. In fact, most of the things I'm showing you have no benefit to kind charges. And finally, the staff celebrations as well. Why not celebrate and get your company to pay for those celebrations? Now, all in all, what this spreadsheet does then is tots up these amounts. You can change these, so some of these may not be appropriate for you or something you want to pursue, like the pension contributions. You may not want to do that. So you would edit this information as required. It would then tot up all of the costs that you would put against there, and it will say total deductions is £85,000. Now you'll notice that the corporation tax was £100,000. But what we've now done is we've identified an additional £85,000 worth of deductions. Wow. The revised profit is now £14,000. Corporation tax goes down to £2,700. And now we've got tax saved there. Now, do bear in mind, if you are taking money out of a limited company, you will want to know, well, what do I do with regards to my dividends? Well, here we are. We've got tax-free dividends that can be taken out of the limited company, irrespective of how much you've got. And then left for distribution, you might say, well, how do we take these dividends out? The dividends distribution will be based on the profits from the company, less the tax liability, leaves the cash, and that allows you to take some dividends out. The tax-free allowance of £2,000 ought to be taken irrespective, and then you're left with £7,500. Now, as a couple, you might want to decide who has the dividends because it depends on how much tax you pay. As a basic rate taxpayer, you pay 7.5% income tax on any dividends that you are distributing. As a high rate taxpayer, that increases to 32.5% income tax. And additional rate taxpayers, I'm not sure why that's at 38.7.5, so it should be 38.1. So I'll change that to here. So the additional rate taxpayers will be paying 31.1% income tax. Now, there are a bunch of useful articles and videos for you to review and watch as well. So please be sure to do your research, use this spreadsheet, and help to reduce your corporation tax whilst taking money out of the limited company in the most tax efficient way. Until the next video, my name is Simon Misiewicz from Optimise Accountants. See you all again soon.